Hey everyone, welcome back to Corporate Decoder, the place where we decode those dusty corporate documents to find the real story. And sometimes the story is about, well, let's just say some creative accounting and shifting goals. Today we're diving into a filing from C.E.R.O Therapeutics Holdings Incorporated, a company whose name sounds like something out of a sci-fi novel. What we've got here is an 8K form, which usually means something important just happened. And oh boy, did something happen. They're talking about preferred stock, new buyers, and adjustments to their funding. Let's see what this all means for the company before we get into the nitty-gritty if you like unraveling these corporate mysteries and getting straight answers without the jargon. Make sure you hit that subscribe button, and if you want to chat with us and other corporate sleuths in real time, join our Discord community. The link is in the description below. So, what is this report all about, C.E.R.O? Therapeutics Holdings Incorporated is telling us about some pretty significant financial moves they've made. Think of it like a company giving its investors a heads up that there has been a change in their game plan, especially when it comes to how they're raising money. This first bit is about an agreement they entered into, an amendment actually, to a securities purchase agreement. Now, that sounds complicated, but essentially, they're tweaking a deal where they sell their own stock to raise money. What they've done is added a new buyer, which means more money is coming in, and they've adjusted the timing of when they get it. They've increased the initial amount they'll receive by $500,000, bringing the total for this first part of the deal to about $2.25 million. The total amount they can get from this agreement is still up to $7 million, but now some of that will come later and some is coming sooner. It's like rearranging the furniture in your house, but instead of furniture, it's cash. Now we get to something that really changes how the company is structured. They V-filed something called a Certificate of Designations. Basically, this is the official document that creates and defines a new type of stock series. E-convertible preferred stock. Think of preferred stock as a special kind of share that can have different rights than regular common stock. And convertible means these preferred shares can be turned into regular common stock later. This filing is a big deal because it formalizes this new class of shares that they're reusing to raise funds. It became effective on the 14th of October 2025. Let's look at the company's registered securities. They have common stock with a par value of just a fraction of a cent per share, about $0.0001. This common stock is traded on NASDAQ Capital Market under the ticker symbol CERO. Then you have warrants. These are like options that give the holder the right to buy stock at a certain price in the future. For C.E.R.O, these warrants are for a very small fraction of their common stock, 1/2000th of a share, and they also trade on NASDAQ under the ticker symbol CEROW. This tells us that the company is already publicly traded and has these different instruments available for investors. Here is an interesting note. C.E.R.O Therapeutics Holdings Incorporated identifies itself as an emerging growth company. This means they're a relatively new public company and get some benefits like reduced reporting requirements. They've also elected not to use the extended transition period for new or revised financial accounting standards. This suggests they want to be on the latest accounting rules right away, which could mean they're aiming for transparency or perhaps preparing for something bigger where staying current is crucial. This section confirms the actual event related to the funding. So, on the 16th of October 2025, they completed their initial closing for the Series E preferred stock. This means they successfully sold shares of this new preferred stock to investors. They raised about $2.25 million in gross proceeds from selling 3,816 shares of this series, E-preferred stock. The total amount they aim to get from this deal is still $7 million. So, while they got a chunk of money now, there is still $4.75 million expected from future closings. This money is being raised under exemptions from federal registration requirements, meaning they're reselling it directly to what they call accredited investors, typically wealthy individuals or institutions who are presumed to be financially sophisticated. This is where they list all the supporting documents for this report. We see Exhibit 3.1, which is the actual certificate of designations for the Series E convertible preferred stock. Then to raise Exhibit 10.1, the securities purchase agreement which was already filed and shows the terms of the deal under which these shares are being sold. And finally, Exhibit 104, which is the cover page interactive data file, pretty standard stuff for modern filings. Now, let us put on our Warren Buffett hats and see what story these numbers tell. What we've seen here is a company actively raising capital through preferred stock. This is a common strategy for companies, especially in the biotech or therapeutic space, which as CERO is often needs significant funding for research and development. They just brought in $2.25 million. That is a good start, but remember, the total potential funding is $7 million. This means they still have a significant amount to raise. The fact that they're reusing a securities purchase agreement with accredited investors suggests they are perhaps trying to avoid the full scrutiny and complexity of a public offering for these specific funds. This can be faster and cheaper, but it also means these investors are usually sophisticated and demanding. The creation of Series E convertible preferred stock is key. This is a very flexible instrument. Its value is tied to the common stock, C.E.R.O, but it comes with its own set of rights and preferences. The key here is convertible. This sets up the potential for a future increase in the number of outstanding common shares, which could dilute existing shareholders if it happens. However, it also signifies investor confidence that the company's common stock will eventually be worth more, making the conversion attractive. Now, we don't have specific revenue or profit numbers in this particular 8K, as it focuses on a material event rather than a full financial report like a 10Q or 10K. But this funding activity is crucial for understanding the company's operational runway. For a therapeutics company, cash is king. This money will likely fuel product development, clinical trials, or other operational expenses. The risk here is that if the company does achieve its milestones, the future funding rounds might be jeopardized, or the conversion of preferred stock into common stock could happen at a valuation that is not favorable to the original common shareholders. On the flip side, the opportunity is immense. If C.E.R.O Therapeutics strikes gold with a successful drug or therapy, this capital infusion will have been a critical stepping stone, and the value of all their securities, including the preferred stock, and eventually the common stock, could soar. In conclusion, C.E.R.O Therapeutics Holdings Incorporated is making moves to secure its financial future. They're bringing in new cash through preferred stock, which is a standard but important maneuver for companies in their sector. The success of this funding strategy will hinge on their ability to execute their development plans and ultimately create value that justifies the investment. It is a calculated risk typical of the high-stakes world of biotech. Alright, that is our breakdown of C.E.R.O Therapeutics Holdings' latest filing. What is your take on these funding strategies and what they signal for the company's future? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord link in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.